Kenneth Rogoff, professor of public policy at Harvard University and former chief economist at the International Monetary Fund, presents a bold proposition in his new book, The Curse of Cash, The Abolishment of Paper Money. I'm sure that if you're like me, there was an instinctive reaction to recoil at the idea of abandoning paper money. Why would you want to phase out paper money? I have to admit, it wasn't something that ever crossed my mind, although to be perfectly honest, my own usage of paper money has drastically gone down over the years. Money would enter my bank account by direct deposit, and I paid my bills online and made most of my purchases with a debit or credit card. Gotta get those points. I kept only a small amount of coins or bills around for the times where it wasn't convenient to use a debit or credit card, like splitting a restaurant bill with a friend or paying for a parking meter. But I've noticed even that has changed, as new parking meters with the ability to pay by phone or credit card started popping up. As I was reading through Kenneth Rogoff's book, The Curse of Cash, I found there was a compelling case to be made for at least a partial phasing out of paper money. And to be clear, Professor Rogoff is mainly suggesting that we phase out large denomination bills, the $50 and the $100 bill, and over a significantly long time of say 10 years. But why so adamant with phasing out the $50 and the $100 bill? Professor Rogoff first points out that the supply of paper currency in the United States, in particular high denomination bills like the $100 bill, is a bit obscene. At the end of 2015, approximately $1.34 trillion of US currency was being held outside of banks, or $4,200 in paper cash for every man, woman, and child in the United States, and 80% of that is in $100 bills. That's close to 34 $100 bills per person in the United States. I know that I'm certainly not keeping that many $100 bills around. In fact, it's quite rare that I carry a single $100 bill around. And apparently, I'm not alone. According to two sources, the Federal Reserve Survey of Consumer Payments and the Diary of Consumer Payments, most individuals don't carry a lot of cash. The Survey of Consumer Payments reported that most individuals only carried $46 in cash, and the Diary of Consumer Payments reported $56 in cash on average and $250 when including cash in the house. Going purely from personal experience, this seems reasonable to me. If anything, I probably carry even less cash than that on average. Professor Rogoff is quick to point out that cash usage is different from cash holding, since individuals could be spending $100 each day and replenishing that $100 bill every single day. The Federal Reserve's Survey of Consumer Payments also provide a breakdown of different payment types for transactions. Cash is used in 40% of all transactions, but only account for 14% of the value of transactions, suggesting that cash is mainly used for small purchases. Cash is used in 2/3 of transactions $10 or less, but only 15% of the time for transactions $100 or more. To me, that doesn't sound like the ideal situation for the $100 bill. I generally don't want to use the $100 bill to buy something under $10, like a chocolate bar, and I want to use the $100 bill for purchases above $100. So if most of the paper currency, and notably the $100 bill, isn't being held by individuals, then where is it? Well, according to Professor Rogoff, about 5% of paper currency are in ATMs and bank vaults. Roughly less than 2% are being held in cash registers at retailers across the country, another few percent in transit to the bank, and perhaps 5 to 10% being held by consumers. Those seem like fairly low numbers. However, the United States dollar is a bit different compared to other currencies of the world, being as it's the reserve currency of the world. A large amount of US dollars are actually held outside the United States. Studies estimate as much as 50% of US dollars are held in foreign countries. But even if we add the 50% of American dollars held outside the US, we still aren't close to accounting for all the paper money in circulation is, especially high denomination bills like the $50 and $100 bill, which make up 84% of currency in circulation. The underground economy. According to Professor Rogoff, that's where all the unaccounted paper money is hiding, and one of the primary reasons why Professor Rogoff suggests that we phase out high denomination paper currency. The drug trade. Many of the big drug busts also result in large amounts of cash seized. This is no coincidence. Anonymous and untraceable, paper currency is a necessity of the drug trade and its highly lucrative illegal transactions. Especially the $100 bill, due to its ability to transfer large amounts of wealth in a relatively small space. More than $200 million in cash, and I can probably guess that most of that $200 million wasn't in the form of $5 and $10 bills, were seized from Mexican drug lord El Chapo Guzman during a raid of one of his houses by authorities in 2014. The United Nations estimated in 2003 that the global drug trade was valued at $322 billion, and one can assume that it's grown significantly since then. It's probably safe to say that with the US dollar being the reserve currency of the world, a good chunk of that illicit trade is done through the US paper currency. Corruption and bribes. Cash's anonymity and mostly untraceability also make the perfect medium for corruption and bribes. Corruption is especially insidious because it has widespread impact beyond the legal enrichment of the corrupted. For example, if a company was allowed to pollute streams or lakes through bribes and corruption, the public will also pay with their health and well-being. Or how kickbacks for lucrative government contracts can affect the quality and the service that the public receives and disadvantages legitimate businesses and distorts the marketplace. Corruption's tentacles have far-reaching effects. In perhaps the boldest case of Cash's role in corruption and bribes, a Chinese general by the name of Xu Chai-ho in 2014 was charged with accepting bribes for military promotions, and the Chinese government needed 12 trucks to haul all the cash out of his residence. Terrorism financing. Since September 11th, fighting terrorism has been one of the top priorities of the United States government, and all terrorist organizations need cash to operate. While bank accounts can be monitored and frozen by governments when they are suspected of financing terrorism, cash cannot so easily be monitored, frozen, and traced to its originator or its destination, providing the perfect medium for financing terrorism. Tax evasion. Professor Rogoff believes that tax evasion is probably the greatest source and usage of cash in the domestic underground economy, and this is probably due to its pervasiveness. We may not be a drug lord, terrorist, or even be in the position to bribe government officials, but I'm sure we all know an individual here or there who are normally law-abiding citizens, but who would engage in opportunistic tax evasion, perhaps working under the table at a bar or restaurant, all cash of course. But there are degrees of tax evasion. Nobody's advocating a sting operation on a babysitter who doesn't report her all-cash income, but rather businesses that underreport their income because of lack of paper trail inherit with cash transactions. Not only do tax evasion become a public burden because the public has to pay for the shortfall in taxes collected one way or another, but it also provides a competitive edge to businesses that engage in tax evasion because they have reduced costs. This competitive edge drives out hard-working legitimate businesses or forces everybody to engage in tax evasion just to stay competitive. Ever notice how some companies will give you a discount if you paid all in cash? I know I have. The IRS estimated in 2006 the difference between tax collected and the amount of taxes that should have been collected totaled $450 billion. These are just some of the curses that cash helps facilitate due to its anonymity, untraceability, and liquidity. And in most cases, high denomination bills like the $50 or $100 bill are being used. It's probably rare that large-scale drug operations are paid through $5 and $10 bill due to the difficulty of moving so much cash and the sheer weight of it all. I'm also not sure your local politician wants to be bribed with coins. Professor Rogoff notes that $1 million in $100 bills weighs roughly 22 pounds. In $20 bills, that would weigh 5 times that amount, or 110 pounds, and in $10 bills weigh 220 pounds, much harder to store, transfer, handle, and verify than the $100 bill. Now, you might be saying that if we got rid of paper currency, drug cartels, politicians, and tax evaders would just use other mediums to conduct their business, like gold, diamonds, or maybe even Amazon gift cards. True, phasing out paper currency won't eliminate all these problems, but it definitely makes it a whole heck of a lot more difficult. Gold is heavy and bulky to move around, weigh, and verify, while diamonds have a high transaction cost, meaning the difficulty of finding a buyer, which may require a brokering fee, and the cost of haggling on a price and grading. Cash has none of these problems. Everybody accepts cash, and one $100 bill is just as good as any other $100 bill. The goal isn't elimination, which is probably impossible, but a significant reduction. By now, you might be open to the idea of phasing out paper currency, maybe just a little, but how would you implement such a bold plan? Lucky for us, Professor Rogoff has a plan. First, the long-term phasing out of the high-denomination $100 bill and the $50 bill. Professor Rogoff stresses the need for gradual and slow phasing out of the $100 and $50 bill to avoid panic and market confusion. We're talking like over a decade. Phasing out high-denomination bills isn't exactly an unheard of phenomenon. In the year 2000, Canada phased out its $1,000 bill, Singapore phased out its $10,000 bill, and recently Europe phased out its €500 bill. Smaller bills is less of a concern because of the reduced role in the curse of cash and can be left in circulation indefinitely or perhaps minted in coins, which would make it even harder to transfer around due to the weight of the coins, but would still serve as a quick and private way of making small purchases. Since we are phasing out most paper currency, that means a higher reliance on banking services, such as a debit card and a checking account. However, about 8.7% of Americans do not have a banking account, mostly lower income individuals. So the next part of Professor Rogoff's plan is subsidized universal financial inclusion, offering low or free debit cards and banking accounts to low-income individuals and families. The government should be able to afford this program due to increased tax collection from a reduction in tax evasion due to phasing out of high-denomination paper currency. After high-denomination paper currency is phased out and basic banking services are available to most, we need laws and a new regulatory framework to protect the privacy of people's bank accounts. This is probably the biggest concern of most people if we switch to a cashless world. Professor Rogoff suggests that governments could extend the legal protection that protects income tax information to digital banking to protect the privacy of citizens. Small denomination bills and coins can still be kept in circulation. Remember, it's the high dollar crimes that we're concerned about. Becky's babysitting operation is safe for another day. Our privacy is already under assault, and where society wants to draw the line between privacy and protection is still up for debate. Professor Rogoff's case for phasing out high-denomination paper currency is definitely intriguing, and he raises some valid points and critiques about the current paper currency policies in the United States and around the world, since it's really a global phenomenon. Please check out Professor Rogoff's book, The Curse of Cash, if you're interested in the subject, as he goes into much greater detail than I was able to in this video. Thanks for watching. Please let me know what you think about phasing out high-denomination paper currency in the comments section.